Welcome to the Mind Over Money podcast with Jessen James.
We need to look at investment vehicles. We need to look at where should we be spending our money? Where should we be investing that money? Yeah. So you must choose where to invest depending on your goals. Now, I want to make this very, very clear that people need to understand there are short, medium, and long-term investment goals. There are short, medium, and long-term investment goals. Short-term could be for you to deal with your cash flow right now. You need to invest in something that's going to bring you some money right now. That's absolutely fine. Medium might be, well, I want to invest in something that I don't need to cash out on just yet, but it'd be great if I had a return on that investment in the next 12 to 36 months. That would be absolutely awesome. Sometimes even 5 years, Long-term is for you building your wealth and building your assets long-term. So this might be holding onto a property portfolio. It might be holding onto businesses. It might be holding onto shares, whatever it might be. Okay. So you must invest depending on your goals right now. That's very, very important. Some people like to just focus on one. Some people like to diversify where they're going. They like to diversify where they're going. Yeah. So me right now, my focus is heavily on my long-term investment strategies. That's where I'm focusing on my energy right now. So be clear on where you want to do that. Okay. Now, there are many asset classes out there, and I don't have time to go into all of them. So many asset classes out there, such as stocks and shares. Stocks and shares. Okay. People will invest in stocks and shares. These are typically in, whether they get a broker to do this or they try and do it themselves or whatever it might be. Doesn't matter how you do it, but it's something that you can invest in. Now, what I will say is when it comes to investing in stocks and shares that you need to be understanding of, again, your risk appetite. Okay. You can speak to an independent financial advisor and they might put it into an investment ISA for you or some kind of investment vehicle, and they'll have someone manage your funds for you, whatever it might be. Now, totally honest with you, if your risk appetite is low, then this might be safe for you because some of these investment funds, depending on your risk appetite, will guarantee that you don't lose your money or all of your money, should I say, or guarantee that you'll keep most of your money, but they also guarantee that you'll only get a little bit of growth. It won't be as high as what you want it to be. Some of them are a bit more volatile and they'll go up really quick and they'll go down really quick. But these are other places that you can invest your money. The thing I don't like about stocks and shares, especially if you're using somebody else to manage your money, is that they will have somebody in charge of your money, not you. Okay. Somebody else will be in charge of your money. And here's the other thing. They will make a hell of a lot more out of your money than you will, plain and simple. But if you are going to invest in stocks and shares, do make sure you speak to someone who's in that industry, speak to a financial advisor, speak to a broker, speak to somebody who can manage it for you. And my advice is to make sure that you are investing in stocks and shares in solid, legit vehicles, solid, legit companies. For example, if you're going to buy stock or shares in something like Apple or Netflix, or one of these other big platforms like Tesla, whatever it might be, you're investing into solid companies and not some Mickey Mouse companies that just sprung up overnight. Okay. Be mindful as well of getting involved in people who are floating their company. So IPOs, people who are just coming onto the market and going, hey, I'm going to float my company on the stock exchange. Do you want to invest in my company right now? Put £1 in and overnight it's going to be worth £2. Be careful of these people because there are lots of companies out there that actually help companies float on the stock exchange just to make IPO money, and then they dissolve and disappear overnight. So be very, very careful with some of these things. Okay. Next, one of my favorites, businesses. People don't look at businesses as assets, but let me explain something to you. Businesses, if you're a business owner, great asset to invest in. When I say asset though, it must be able to operate without you. And that means there should be systems, processes, and people in place so that that business can operate and still bring you a return every single month without you having to be there. Now, if you set these business up correctly and you safeguard them from any financial downturn or economic downturn, then they will ultimately become assets for you. Yeah. And now there are lots of assets within your business too, such as intellectual property, such as your client databases, such as your goodwill. Yeah. You might accumulate assets under your business, such as equipment or property or whatever it might be. Okay. So businesses are good assets as well. Now, just to share with you, right now, there are literally thousands of businesses for sale right now. So just make a note of that. If you're interested, there are thousands of businesses for sale. Again, go and get some advice on this before you do anything like this. But you can actually buy businesses for nothing right now. There are businesses that you can leverage what we call a seller finance deal, where you pay nothing for the business up front and you agree a price with this person who's selling it, providing the business performs. And you can pay that over whatever 1, 2, 3, 4, 5 years, however long you want to agree that. Okay. And it's paid out of the profits of the business. So if you're going to go out there and buy a business right now, existing business owners, my advice to you would be this: buy a business that complements your existing business. Okay. So for example, one of my businesses is a training business. If I was going to go and buy something to complement that, I might go and acquire another training company right now, because then I can bolt that onto what I'm doing. However, if I went and bought a coffee shop right now, that's not a complementary business to my existing business. That's a whole new sector, which could be another problem in itself. Okay. So lots of businesses available for sale right now because of everything that's going on. Okay. Commodities such as, gold, silver, things like that. These are things like, people want to invest in, like which are fine, I know a lot of people right now are investing into gold. I know some people are investing into silver as well, but gold seems to be the flavor of the month at the moment, from some of my friends who invest in it. And silver as well is there. Now, there are lots of places you can buy this stuff. There are lots of brokers. There are lots of people online you can buy gold bullion from, or you can physically buy gold and store it yourself. Okay. But most people tend to try and buy shares and stock and hold on to gold in a digital platform or whatever it might be. I'm old fashioned. I like to see where my money is. I like to feel it, hold it, tangible. Okay. But these are the places that you can spend your money, because these are investments. These are things that will go up and down in value, but ultimately they'll still be worth something. Okay. Here's one that not a lot of people think about: intellectual property. Okay. Those of you who know me will know that I own a lot of intellectual property. I have courses and knowledge that I sell online through digital platforms that don't require me to deliver. So basically, these things bring me a residual income each month without me having to do any work. So this could be stuff as membership sites. This could be mini courses. This could be, online programs, stuff like that. So if any of you have got knowledge in your head right now, you should turn that into a course or something like that and turn it into what we call intellectual property. Yeah, it's very, very easy to do once you know how. And look, let's be honest, people are buying information as we speak online. They are buying information as we speak. Next, cars. Okay. And it definitely does depend. It definitely does depend. Okay. If you buy, for example, a classic car, and you maintain it or whatever it might be, it might appreciate in value. Okay. Especially now where everything's moving towards electric. If you buy yourself an old school Ferrari, proper petrol head car, and stick it in your garage for a while, at some point that will start to appreciate. Okay. However, I want you to think a little bit different around this. I want you to get creative. There are ways for you to purchase vehicles and create them as a business and rent them out. Now it becomes an asset. Same with, I have friends who actually have bought boats, have bought cars through their businesses and then set them up as rentals, and they're able to rent them out. So now suddenly it becomes an investment. Okay. And if you get clever with how you finance that vehicle in the first place, then you'll probably have very, very little money deployed into that deal, where you'll have it pretty much bankrolling itself each month. Okay. So it's all about getting creative. Anything can become an investment if you look at it from a creative way. Yeah. Supply and demand. Okay. What do people need? How do I monetize on that? Okay. However, one of the most efficient, safest, time and tested ways of investing money is property, real estate, whatever you want to call it. Okay. For any of my American friends that are here, real estate. All right. But here's the thing. Property, in my opinion, is one of the most safe, secure, and reliable investment asset classes that you can ever get into. And the thing is, there are two ways to get into property investment. There's only two ways to get into property investment. Number one, controlling other people's assets. So you don't actually own them, but you control other people's assets. When I first got started in property back in 2009, I built up a very, very successful rent-to-rent portfolio for my care business for two reasons. Number one, I didn't really have the cash at the time to invest in buying in properties. And plus, I didn't want to tie up the capital in there. I wanted to use it for my care business instead. Or number two, the second reason why I did that is because I actually wasn't allowed to, as a care provider, I wasn't actually allowed to be the landlord of the properties that I was operating from. So rent to rent was really, really effective for me. So controlling other people's assets. The second way to get into property is to control the assets yourself. Okay. And those are the two ways to get into property. But by far, it's one of the most safest vehicles to invest your money. Why? Because you're investing in a tangible asset. And yes, property can go up. Yes, property can go down. Yes, it can. But here's the thing. Remember this. You're always investing into bricks and mortar. You're investing into something tangible. And this is where a lot of savers, penny pinchers, people who don't understand money, they get lost. They get lost. Yeah. They really get lost. They think that they're going to lose money. So I'm not going to buy it now. I better wait. And they keep on waiting. And whilst they're waiting, someone runs past them and does it for them. Yeah. And does it before them, should I say. So it's very, very important that you understand that property is probably one of the most reliable places for you to put your money right now, especially with things that are happening right here in the UK. So some things to consider before you invest. Some things to consider. Number one, do your due diligence. What do I mean by this? I mean, check out the people that you are investing with, whether that's a company, whether that's an individual, even down to an opportunity. I'm going to be honest with you. I see a lot of people out there, and you'll notice I haven't mentioned cryptocurrency in my investments. Okay. It's not because I don't think it works. It's just not my personal preference. Okay. Call me old fashioned, but I prefer to see where my money is. I prefer to have a tangible asset that I can touch. Now, this is my opinion on it. If you disagree with me, that's absolutely fine. I'm just letting you know that I do not personally endorse digital currency. I don't know enough about it. I feel that there are a lot of companies popping up right now, creating all different freaking types of coins. There are coins being named left, right, and center. And people are flooding money into these unknown, intangible assets. And I just want to say, for me, if you're going to do that stuff, like I said, not judging you, do your due diligence. I've seen people lose a hell of a lot of money overnight investing into these new companies that keep popping up every left, right, and center. And they haven't been around a long time, but they're good at their marketing and they're good at telling people how to get involved. So be very, very, very careful with it. Make sure you check out the people that you're working with. Get testimonials, get references, find out if they're credible or not. Yes, I'm very precious about my personal brand and reputation. Okay. So you won't catch me putting my neck on the block for any amount of money. It's taken me years to build my brand. And here's why it's important that you should build your brand. Because if you lose it all tomorrow, like I pretty much did back in 2015, as long as you got your name, you've got your integrity, you've got your honor, and you built up a brand, you can build it all up again. All right. So me personally, I love and cherish my personal brand too much to rip anybody off. So when you're going to do your due diligence on people, check them out as well. Are they someone who's in the public profile? Are they someone who's got a strong personal brand? Are they someone who's got too much to lose? You got to be mindful of this, okay? So not everyone cares about their reputation. And if someone doesn't care about their reputation, it usually means they've got something to hide. Make sense? Fantastic. Next, contracts. Get contracts in place when you're investing, Okay, get contracts in place when you're investing. So for example, when my investors invest with me, we issue contracts. These are legally drawn up contracts that our solicitors have drawn up. We also have specific documents that we ask them to sign just to confirm their eligibility for investment and all that kind of stuff. Listen, all I'm saying to you is this: when you're investing your money, I want you to remember this. Super important. And it's not just for investing, it's for anything in life. Agreements avoid disagreements. It's very, very important that you understand this, okay? If you have agreements in place, they will avoid disagreements later on. So whenever you invest money with anybody, make sure you've got a contract and make sure that it checks out, okay? Make sure it's checked out, okay? Next, security, okay? Have security where possible. Now, as you understand, all investments carry risk. Okay, you must all understand that. Otherwise, what's the point? Okay, even when you go and get a mortgage, a mortgage advisor will tell you, all investments carry risk. That means if you don't pay your mortgage payments, your home is at risk, plain and simple. Okay, it's very simple to understand. So there's no secure, guaranteed nothing. However, get security where possible. So for example, some of the investors that we work with, sometimes if we're going into property developments or going to property deals, what we do is we might get these people to we will secure their money against the land. So we might give them a second charge against the land. We might give them a second charge against the actual property. In some instances, if it's only their cash being used to acquire that asset, we might give them a first charge on there, right? Just like the mortgage brokers do, the mortgage companies do, right? All the mortgage providers, that's what they do. They lend you money on the house, but they have a first charge on it. That's how it works, okay? If you sell it or get rid of it, you've got to pay them off. That's the way it works, okay? So where possible, get some security on your investment, providing it's doable. Next, understand risk to reward ratios. This is where I want some of you guys to wake up if you're sadly living in la la land. There are some people out there who want to invest the minimum but get the maximum return. I see people going out there trying to become millionaires, spending £100 on the latest investment craze. And I actually feel like telling these people that they really need to get real. You got to get real, okay? If you're only spending £100 or investing £100, what makes you think you're going to become a millionaire overnight? Makes no sense, all right? That's the unrealistic risk to reward ratio, right? So what does this mean? It means you get what you put in. You've got to understand that. If you're not willing to risk enough, then don't expect to have everything, okay? You might get something, but you're not going to have the big thing, okay? One of the things that I've noticed about successful entrepreneurial type people is this. They understand risk to reward ratio, okay? So very important that people get realistic with this, all right? You've got to understand your money blueprint. You've got to understand your own attitude to risk when you're investing money, all right? Now, so once you understand money psychology, once you understand the different asset classes and where to invest your money, you need to move on to step 3.
You've been listening to the Mind Over Money podcast with Jessen James. Don't forget to subscribe and follow on all the channels. Links in the show notes. Please also leave a review and visit www.jessenjames.com to find more resources on how to create the life you deserve.